Hello, traders. It's 8 a.m. Chicago time on Tuesday, the 10th of November 2020. Thanks for joining me today. This is episode number 1876. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk is being allocated differently for different things. This morning, we've got the Russell again getting the biggest allocation. Mainly, we're seeing this from the Nasdaq, potentially large caps moving to small caps as investors gear up for a recovery. Probably still as a result of this vaccine, the prospect of a solution in Q1, Q2 2021. As a result, the Russell is up 24.5 points or 1.45%. The Nasdaq is the drag today. Nasdaq was down as far as 2% overnight and is currently down 1.33% or 157 points. The S&P is down 11 and a quarter points, opening below yesterday's low. Currently, day session low. And but then the Dow is up 148 points. The DAX is up, and the Euro stocks are up. So, as I said, a mixed bag. The U.S. bonds are up 3 ticks, and the 10-year notes are down 3 small ticks, 1.5 big ticks. So this is where we stand today. Really, it's a mixed bag. Relatively high volume overnight across the board, with the Nasdaq being a laggard and the ES following suit. So yesterday the Nasdaq was a laggard all day, and then finally the ES caught up. So that's where that stands. Mainly in summary, we're looking at Amazon being charged in the EU for distorting online retail competition. The election continues to be contested as President Trump has pushed Barr, or the Attorney General Barr is they're both making an offense legally, looking for irregularities or any proof of irregularities in the vote count. And then on top of that, with the market generally more optimistic, but still having an issue with this pandemic, basically popped up yesterday and came all the way back. So the European equities are still hovering at 8-month highs. Asian share markets mostly rose. The dollar index and gold prices were in the green. Oil gained as vaccine hopes outweighed the expected impact on fuel demand due to new lockdowns. So that's where that stands. In terms of earnings, we don't have anything on deck for today. Nothing really substantial. And then as far as the calendar, we did get the German zoo, which hang on, the actual is not updated. The German zoo, which came in weaker, 39 versus 42. The Eurozone zoo came in weaker as well, 32.8 versus 36. At 10 a.m. Chicago time, we have the JOLTS job openings. This is a list of jobs that are unfilled, expecting 6.2 million. And then we get the IBD tip optimism for November, 53.2 expected. Fed's quarrels at 2, API crude oil stock change at 4:30, and Fed's Brainerd at 5. That's what's on deck for today. Looking at the expectation yesterday, as the trader bite was taking place, the market was trading at 36.54 with a high of 36.68. The expectation is we're likely to push into the 70 and then become responsive. And I had talked about the fact that this a break below this area right here, the 07, the 3607 or so, is likely to see us run down through the flagpole of this low volume node here back to 52. But the expectation was we would get a gap remaining. Here's what actually happened. We open up in an open auction out of range, attempted to push higher, unsuccessful. The first big rotation was down 17.75 points. Pulls back to mid. Look at that mid VWAP pullback. That's a beauty right there. And then we get the continuation, pushes back in, tries to get, it gets above the mid VWAP, tries to hold the opening swing, is unable, and then continues lower. This was very murky to me, very difficult to trade. Nice little trend line here, but very difficult to trade. Finally broke and then look for the continuation through the IB low. Later in the session, attempted to come back in. We were mostly balanced with a double distribution profile for much of the session, weakish bottom, and then it finally gave up the 90 area, which was a well-fought area. 90 had multiple measured moves in that region. Let me clear my throat. Multiple lows at the 88-90 region, and once that gave in, we went back to the scene of the crime. We ended up pushing to the SOC of the coronavirus news at 35.52 and a quarter. So I had to wipe that SOC off the chart since it was tagged already. So a news-based event pushed up, consolidated, came back, and then filled back in and actually finished lower yesterday. So that's where we stand. Notice the overnight point of control is 35.52 still, and we've got a new gap below us. So we ended up finishing the day with the gap remaining open as expected. Quite classic behavior yesterday, in my opinion. Looking at what we've got for today. So yesterday was a late liquidation. So what we had yesterday for today looked like a P-shaped profile, and it looked like it found balance in the upper distribution, and then it came right back to the lower portion and basically built balance in the day session where it was overnight. And then last night, we basically accept this area even further. We don't, we build even more balance on top of it. Very boxy profile, high volume, 431,000 versus 190,000, and sitting sideways. Not very much accomplished overnight. Pretty orderly test down and back up in sideways, expecting chop this morning in this gap zone here. Not the best situation to be in, but what we see is that the market clearly rejected that higher move. Yesterday, day session, the delta was negative throughout, which makes sense. We left the open above us, and prices remained below the open, and the delta remained below zero. So the volume was there accompanying the price action. Here's the overall picture. This was last week right here. This black box is last week. Look at last week's profile. Very clear discovery profile, price discovery profile, taking back. If you recall, we talked about the 34.30. Once that breaks, we're likely to battle the 34.40, 34.60, and then we're looking for 35.41 to be taken out. We got pretty close on Friday, Thursday, Friday, to the 35.41. Ended up taking it out yesterday. And yesterday, what we see is a market that just sold off from the open straight down. It just did not have much holding it higher. Look at the delta as price goes up. Delta is falling. We had pretty good volume yesterday. We had pretty good range. But overall, it seems like with new all-time highs, the market is a little bit exhausted based on how the volume is trading. So pay attention to that as we trade today. We do have a gap beneath us, and my expectation is it's likely to attempt to come into the range of yesterday, and then it's likely to come back and come into the balance from last week at 3,500. I think the point of control here. 3505. 3505 becomes the big target from last week. So that's what we're looking for today. I don't have very much to contribute to the discussion today other than to say, you don't expect the same kind of action we got yesterday today. The news is already baked in. The coronavirus, the Pfizer, um, BioNTech, something like that. Um, the news is baked in. The election news is baked in. The challenge from Trump against Biden is likely to be muted. There's just no evidence so far presented that would indicate that there's foul play. The counts are being finalized, and they're likely to be recounts, but it's not likely to change the result. And so I think the market is kind of done with that news so far. And whatever happens now is like the market's likely to look at as posturing and propaganda more so than things that will impact policy, either fiscal or monetary, and that's how we're likely to move forward. Yesterday, we did not hit the overnight high or low. The O1 stat remained open, so that's a very low probability, around 2% historical probability. Today, it's likely to get up into 62.75 or push that 11 quarter, given the way things are playing out. 11 quarters likely fragile down into 05. In the order flow, it's been pretty well organized. The size in the book that's resting has been trading out, as you see here. There's a resting, relatively large order that traded out, and then the market bounced back up. Resting order down here as well at the 25. Again, I'm looking for the 11 to be taken in the 05. Beneath, we do have 45.46, which I don't have a reference for there. And to me, what's important is 50.52 above. Other than that, it's just again, the market's quite thin. The order book is quite thin, and there's quite a bit of noise, as you can see here. I've got the heat map turned all the way up, and we're still seeing red streaks all over the place. So, what are we expecting for today? Things are slow. Very wide ranges over the last couple of days. Here's what we're expecting for today. Ta-da-da. All right, so what we've done is we've shifted the point of control down. It was up here earlier. Give me a second. Let me adjust the cloud notes for that. Cloud notes 35, 31. Let's see. 35, 35, 35. 35, 35. Just adjusting the cloud notes for convergent members. All right. So what are we expecting for today? Really, we are completely in balance here. We have basically created a triangle in the overnight session. The VWAP and the mid is on top of the overnight point of control. on top of the overnight point of control, and it's all just kind of going sideways. Just remember, consolidation, compression, coiling, balance leads to imbalance, and it's likely to push out. And given the volume that we've traded overnight, this push could be quite strong from here. It could squeeze pretty well, and in this case, the expectation is for an open auction out of range. I'm looking for responsive buying early, looking for it to push back into the range here, consolidate, struggle at 35.52 to 58, and then push down and through and into last week's range, the last week's point of control down here from these last 2 days, off screen 3505, and then start working itself down into the 3500, 3493, and then back up into the range on the close to balance out. So test up into the prior range, but fail to hold and come back down. Remember, we've had quite a run, right? We've got quite a few gaps. We've had quite a run. We gapped up new all-time highs. The election is behind us. The uncertainty is behind us. Money's been made, and now it's time to bank. And as we bank, the market is likely to continue to sell off. The alternative is an open auction out of range that moves lower. Remember, there's a triangle here. Market moves lower, breaks it, comes back, consolidates, starts to impulse up. I'm looking for if we get an impulse higher and push the overnight high, we're likely to come back in to the 35.58 area and then start squeezing back up through this low volume area to 81, which is a single print. Expect it to consolidate here and finish at the point of control of yesterday and hold sideways here. This would be confirmation for buyers that the strength is still there and it is likely to challenge the all-time high made yesterday. If we come back into the range today, and come back and regain the balance from yesterday afternoon, this is pretty bad for shorts. We are likely to just continue to trickle up to 36.68 from there. That's the secondary hypothesis. Remember, we're opening in a gap zone. We're opening below yesterday's range and above Friday's range. And we're opening in a coiling triangle on high volume. So all of that is likely to come together to create a compressed allocation by participants, and somebody is likely to be wrong. So it's likely to push out. The more likely scenario on the downside, let me move this over here, is mainly driven by the NASDAQ. If you look at the NASDAQ, yesterday it did not have the same kind of structure where it pushed higher and it came back to where it was overnight and held steady. The NASDAQ was really a seller all day yesterday. Zoom was off, I think 18% or 19%. All of those online kind of pandemic winners are getting their profits taken out, and so tech is weak. Money going into small caps, traditional stocks, and so it's been weaker. And even overnight, you could see this trend line here, the NASDAQ, and it's not like the ES where it tested up, tested down, tested up, tested down, and has formed a triangle. This is what the ES looks like. The NASDAQ, on the other hand, has tested down, lower high, lower low, lower high, and is a little bit disjointed in terms of balance. And I think that's likely to weigh in on the ES for the session. This is why scenario one is what it is. Okay, so I'll leave you with that. Good luck today. And I'll catch you tomorrow morning. Remember, if you're trading while not defining risk first, you're simply gambling. The market will take your money. Other guys will take your money. You can't be half-assed about your trading. You're competing against the best of the best. You don't have to be the best to make money, in my opinion. You don't. This isn't like a sport where you're really a nobody unless you're somebody and you have endorsement contracts and big branding and big advertising deals. You could still make a living, in my opinion, while trading in the middle or trading small. But that's just not possible if you don't understand your risk. If you haven't clearly defined your risk and obeyed it, it's very hard to last in this business. Good luck, and I'll catch you tomorrow. Take care.